3 opportunities from rising tax values for real estate agents. I'm going to go over all 3 of them right now. But first, feel free to like or subscribe and hit the little bell notification for future videos. If you're listening to this on our podcast, please subscribe. And if you don't mind, if you find this useful, give me a review. Okay, so property tax values have risen dramatically across Central Texas. The tax assessor's office has said that almost every single home value has gone up 50%. So obviously a lot of real estate agents, people in the community are talking about this, but there is a way for you to capitalize on this. There's a way for you to add value. And I've got 3 points here, which I want to go over with you. Look, this is a huge jump for home buyers, home owners. They're in shock on this. So how can you add value? How can you make an opportunity to become valuable to, homeowners that you've sold property to, investors, potential tenants? Number 1, reach out to everyone you sold a home to in the past 4 or 5 years. Everyone at all, right? You can do this in several different ways. You can call them by the best way, shoot a text, or you can do a batch email that says, property values on the rise, what you need to know. And in there, you tell them that the assessed value has gone up, that you are available to them to do a quick CMA. You can do a Zoom call, 15 to 20 minutes long, where you can go over what their actual value is compared to what the tax assessor says it is. So you'll set up this meeting. When you meet with them, you will have everything ready. You'll talk about what they've done to the home. You'll look at the comps and you'll kind of agree on a value, okay? Go a step further and use HomeBot, which is an automated valuation tool that can be adjusted. So what you do with this is while they're on the Zoom call with you, you log into your HomeBot account, type in their address, type in what they paid for their home, what their interest rates, not what they paid for their home, what their balance of the mortgage is, and what their interest rate is. And what'll happen is every month, or however long you want that frequency could be, you get every 2 weeks, every month, they will get an automated value based off the value you put in there. See, the thing is an automation value tool, this is not going to be accurate from the start because we lag in values. But if you go in and you adjust it, it should try to keep up. Now, let the homeowner know that this is going to need to be adjusted every 6 months to a year to reflect current value. What you've done here is you have added value. You can let them know if they should fight their taxes. And you've set up a drip campaign. At the end of that meeting, ask them or tell them that if they have anyone that would benefit from this, please let me know. What you've done is you've essentially asked for a referral without having to ask for a referral. Okay, I can tell you that these HomeBot reports get opened very regularly. They're very popular, and you'll get a notification when someone opens it or they request an updated value. Number 2, leases. If you've done any leases, and I know a lot of people don't do, regular leases, apartment leases, but sometimes you have people that move here and they've rented a home for $3,000, $4,000, $5,000 a month, right? Reach out to those people and let them know that rental prices across the city are going to go up. We're going to see the biggest increase in rents that we've seen in years. Reason being is that rental properties are taxed on current value. Homeowner properties have the advantage of having a homestead exemption, which only goes up 10%. So investors in rental properties are going to get hard, and they're going to pass on that deficit or that adjustment in their return on investment to the tenant, and ask them if they want to look at what their options are. It's better to do this right now. Taxes just came out recently, so better to do this right now before their expiration of the rent comes up and rental properties are rental owners are starting to adjust for the increased cost. I can tell you, I knew that tax values have gone up. I have not even looked at my values. The first thing I looked at was, when are my leases going to expire? Because we're going to adjust them accordingly. Okay, so you get ahead of the game and contact any past renters that you've helped and see if they can afford to buy a home, because in some cases they may be able to find even if they're in a house paying $4,000 or $5,000 a month, they may be able to find a condo a little bit further out. Number 3, investor-owned properties are going to hit the market. Let me explain what this means. A lot of investors in the past 3 to 5 to 7 to 10 years buy property in Austin and don't do anything with it. And what I mean by that is they're not diligent at either keeping up the property or increasing the rents. Okay, so if someone bought a duplex 10 years ago and they put someone in for $1,200 a month, then they're probably increasing the rents very little. Okay, and even if they're keeping up to market value and the tenant stays there, they're going to have to increase the rents by so much that the tenant would probably move out. They are going to have to spend $60,000 to $70,000 in getting the place up to, aesthetically what someone would pay for market rent. That they're not going to want to do that. Okay, and that's okay because they have equity in these properties. They don't need to, right? A lot of people are going to say, you know what? Instead of going through the hassle of getting rid of the tenant, or the tenant to move out anyway, and spending so much money out of pocket, which they may or may not have, they probably have $200,000 or $300,000 worth of equity. Okay, now these are going to be value add properties for your investors. And what I mean by that is, let's take a duplex that's going for $700,000, right? That is, completely updated. A lot of people these days are updating duplexes with quartz and nice counters and stainless steel appliances and stuff like that. A lot of people that are selling these type of properties aren't going to have that. So a typical example is, if a home that is a duplex has been renovated or flipped is $700,000, these guys may be looking at selling it for $500,000. They probably bought it for $250,000. They got $250,000 worth of equity. This is a chance for you to get your investor in a property like this that they can spend $50,000, $60,000 and make money when they buy. Now, as someone that has sold a lot of investment properties, the delivery of this to your clients or potential investors has to be done correctly. They need to know, look, this is not a cash flow play. You're going to put 30 to maybe even 40% down on that property. But it's an investment play, appreciation play, because when they let's say they put $30,000 on a $500,000 duplex, put $50,000 in it, they instantly make $150,000 or whatever that spread is. You get my point. My point about this is that there are going to be more opportunities for investment properties over the next 12 months than we've seen in a long time. So if you're watching this on YouTube and Facebook, I would like to know, what is the impact you're seeing already from property values, or property tax values going up? Are you getting calls from clients? What are your predictions on the market? Okay. And finally, we have a series of videos. There's a video right above my head that deals with vacation rentals I think you should check out, and feel free to like and subscribe for future videos.